Energy, all important to power the economy and the nation. But for the first time in 5 years, Kenya's power tariffs are up. The increases, which took effect in January for industrial consumers, will continue for the next 2 years. Manufacturers, who consume half of the electricity produced in the East African nation, are the most affected.
Cost of production is increasing. Manufacturers are complaining. 60% of the power or higher in this country is used by the manufacturing sector. And every increase, let alone the 13%, even a 0.5% increase, is denting our ability to manufacture cost effectively. Our cost of production in Kenya is higher for almost everything than anywhere else in the world. How can we compete and produce our food, our roads, our transport, our buildings, our homes? They all depend on manufactured products which are artificially high because of high cost of power.
The cost of living is expected to tick up as a result, with analysts projecting high single-digit inflation by the second quarter of the year, up from the current 7.2%.
Definitely cost of production, if you look across the value chain of the production process for any business. Majority of the business will guide you that they spend close to 30-40% of their total cost is energy cost. And considering that energy cost has gone up, then obviously the challenge now is on companies to try and come up with new energy sources in terms of substituting, or the other alternative would be to try and pass it over to the consumer. But the challenge with passing it over to the consumer is that majority of the industries that we're looking at are operating at excess capacity. So they don't have the luxury of increasing their prices without hurting their volume sales.
Given most manufacturers' costs are about 40% are from power and energy, the 12% increase might look small, but the impact is really big, especially when you look at the consumption of the variable tariff. It's going to have a short-term effect on the inflation before we see actually them reducing tariffs in the next 2 years. They are likely to pass that additional cost to consumers, who are now the major people who get affected in our market especially. The other thing is that if inflation doesn't stay within the central bank rate, which is 5% plus or minus 2.5%, we might see central bank coming in and using interest rates as an instrument to try and control high inflation levels and to avoid what happened in 2011.
Locally manufactured goods risk being overpriced for the export markets such as Uganda, which is Kenya's leading trading partner. Cheaper imports are another worry for manufacturers, while foreign direct investors may overlook Kenya for other competitive markets.
Power is one of the components of the production value chain. It is a significant input in the cost of production. We have challenges in the entire value chain. Our transport cost is very high, and then so on and so on. But certainly, we are becoming uncompetitive day by day because of the cost of power. And not only the cost of power, I think the manufacturers have another significant challenge, which is the quality of power.
As the cost of operations go up, they are likely to pass that cost to the consumers, which means cheaper imports will likely come in more unless the government puts some barriers to cheaper imports and support the domestic manufacturers. So that pretty much means that it also hinders new companies from setting up businesses, especially manufacturing businesses in Kenya, because of the high power costs going forward, because it reduces their bargaining power towards consumer, and obviously they'll start making lower margins than if they would have the same setup kind of elsewhere out of Kenya.
ARM Cement, the country's second largest consumer of electricity, plans to generate its own power from coal in order to lower its energy costs. What then is stopping other manufacturers to follow suit?
Speaking with majority of the manufacturers, they always tell us setting up their own off-grid plant is more expensive than using the main line from Kenya Power. So if you ask me, that's not a good alternative. I know of companies who have moved to coffee husks, for instance, or even using tires, old tires, as a way of generating heat in the production process. So I think that's the avenue we'll see majority of them moving towards. And obviously we know of the sugar industry starting to focus more on ethanol production. So again, that comes in as a good substitute to both what the national grid and also heavy fuel oil in the manufacturing process.
The key constraint in our market is whether all the manufacturers have the funding to come up with such a power project for their own manufacturing business.
Besides manufacturing, horticultural earnings have declined over the last 3 years due to high cost of production. Being a top foreign exchange earner for the country, the result is reduced dollar inflows, which risks widening Kenya's current account deficit even further.
Horticulture becomes interesting because, again, we say the biggest challenge has been the cost of production, be it labor and inputs in terms of fertilizer and acquisition of quality seeds. Overall, I'd say, yeah, I don't see how they'll get out of it currently. If I look at the international prices in terms of product pricing, the prices are still favorable to an extent that if you can manage to become operationally more efficient, for instance, mechanization. I think we've seen that coming across many times in terms of trying to mechanize the entire process. So to me, that would be a good substitute. And also then locally, we need to start having our local research labs actually providing us the good product seed, as opposed to what they currently do is import the product, which is slightly more expensive. And then obviously it's route to market. That's the other option.
But after all is said and done, the government has embarked on ambitious projects to retire thermal-generated power to much cheaper sources. At least 340 megawatts of power will be added into the national grid this year, mainly from geothermal, reducing the overall cost of electricity by 40% this year.